Hello, everyone. Welcome to the Green Effect Podcast. This is episode number 41, and we have the amazing Tom Karadza on. Tom and his brother Nick run and started Rockstar Real Estate. Great guy, knows a lot of stuff. I wanted to have him on because he talks a lot about hard assets, unsound money, hard money. What are these things? We talk economy, debt, banks, benefits of real estate, risk and reward. What about negative rates? Does he think we're going to see those? And how did he start Rockstar? Went from a desk job to, as he says, living life on his terms. So great episode, a lot of fun, a lot of banter back and forth. Here we go with Tom.
Welcome to the Green Effect Podcast. Finance, life, business, and everything in between. And now, your host, Stephen Green.
Welcome, everybody, to the Green Effect Podcast. Today, we've got in our new studios here, because everyone's basement is a studio now, we've got Tom Karadza with Rockstar Realty. Tom, welcome.
Hey, Stephen. Wow, when you said our last name so well, I'm impressed.
Did I nail it?
Me. Yeah, I think you really nailed it. But it's Rockstar Real Estate.
Real estate. Okay.
And you know why? Because when we started this business, we didn't want to admit to anybody that we were getting our real estate licenses. So when we named the brokerage, we thought, this was our wisdom, we thought Rockstar Real Estate sounds less realtor-ish than Rockstar Realty. So let's name it Rockstar Real Estate. That was the complexity of our thinking, the advanced analysis of our decision. Let's call it Rockstar Real Estate. It sounds less real estate brokerage-ish.
And I love that. And even you don't call your guys realtors, you call them coaches.
You know what? And it's not, listen, we know lots of realtors now, so lots of amazing realtors. It's just when Nick and I started buying our own properties, rental properties, however long ago now, 20 years ago, we would buy a property. And this one guy specifically shook our hand and he said, well done, boys. Real estate never goes down. And he just walked away. The house was vacant. We didn't have anyone renting it out. It needed renovations. And I just, at that moment, I'm like, did we, I don't know if we just got the best advice in the world or not, right? Turns out the advice was pretty good over the last 20 years. But
it worked out. Yeah.
It made us shy away from some of the professionals, but now we know some of the great ones. So,
well, and I think, listen, any way you can differentiate yourself in the market, right? It's all about, hey, listen, we got Rockstar coaches, we got Rockstar Real Estate. There's nothing wrong with that. It's a thing. It's a brand. I think it's awesome. Yeah. I remember the first time one of the first times I met you, I said, I was talking to one of your realtors, and then you kind of said, well, one of the coaches? I'm like, yep. That's what I meant. Sorry. But it's okay. That's awesome.
I think we're less anal on that now, but yeah, you're right. We were like that, pretty aggressively so for a while.
No worries. So listen, the other disclaimer we have to give here before we even go on. So I'm in a basement. We might see a dog bark, or I might see a dog walk through. You're in your studio there. You might see people walk through. It's all good. This is how we do podcasts on videos now. So it just makes for good entertainment. So that's the disclaimer. It's done. We're going to keep going on. So listen, I want to have you on. I've wanted to have you on for a while. And I think, I love your excitement, how positive you are with stuff. I love you sharing stories. I listen to your podcast, so shameless plug, the Your Life, Your Terms podcast. And I want to have you on just, for myself to ask you some questions and stuff like that. So just really briefly, Rockstar Real Estate, how did it all come about? I know the story. Give me the 2 or 3 minute history. How did you go from, and I'm going to steal some of your thunder, how did you go from a desk job, because that's what you were in, to running this awesome real estate firm?
Well, you're too kind. I mean, thank you for saying it that way. But I think when I was in the tech, so I was working at Oracle, then I worked at NetSuite. I was making good money, but I was starting to read those books. I think I was reading Robert Allen books that was like multiple streams of income. I started reading Think and Grow Rich. Started reading all these books that got my mind just twirling around. And Nick and I were buying rental properties in Hamilton. So we both grew up in Mississauga. I was working at the time in Mississauga, but I had moved to Oakville. And I was driving, I was stuck in bumper to bumper traffic every morning going to my job. And I was thinking, there's no traffic going the other way. Like it's wide open going to Hamilton. My properties are in Hamilton. They make good cash. They're great properties. Why am I stuck? Why is the money that way? And no one's on the road going that way. Literally, this was the thought. Why
This is
is the money?
aha moment.
This was
Almost.
my aha moment. While I was stuck in bumper to bumper traffic going this way, I just thought that was like the perfect way for me to get frustrated. I was stuck in this traffic going the wrong way in my mind. And I remember going home, and it was at a time where, American software companies can be really aggressive, and they were squeezing us pretty hard. NetSuite was about to go public, and it was a great company, great friends, still have tons of friends there, learned a ton there. But I knew I just couldn't last in that environment for the next, 10, 15 years of my life. I didn't want to get approval to take 2 weeks of vacation. I wanted to live life on my terms. Do you know what I mean? So,
when I'm there, I've been down that road. Totally. Yep.
totally. Yeah. So, one day I just decided, after a bit of a frustrating period, I just said, I asked, I don't know if I told my wife or asked my wife. I'm not sure how it went down, but she was very supportive. I'm like, listen, we got our real estate licenses now, and Nick and I got them really just to bypass realtors at the time. We never thought we would turn it into a business, but I'm like, I'm gonna quit my job, and I'm gonna help investors, because it doesn't seem to me that there's anyone in the real estate industry that's really focused on investors. I know that's changed now over the last decade, but at the time we felt like we couldn't find anyone. So I'm going to quit my job. And it was a 6-figure salary, good job. And she supported me, and Nick quit his job, and we started Rockstar Real Estate. It was just myself and him, started working with investors. And now over the last, 12, 13 years, it's grown. There's like over 50 people here. We've helped investors buy, I think it's over $1.5 billion in real estate now over on Ontario. We've met great people like yourself. And it's been awesome. It's been hard. It's been hard and stressful and brutal sometimes, but the purpose of it in trying to help people, because everyone buys a rental property as trying to put another stream of income in their lives. They have a greater purpose for the property than just becoming a landlord. And so just being involved in other people's journey in some small way has made this whole thing really satisfying.
I'm with you on that too. So how long ago did you start this?
I quit my job in, I think it was May 2007. So,
Okay.
and Rockstar was incorporated as a brokerage in September 2008.
Okay, so I'm about 3 years behind you. So I had that aha moment around 2011 where I just got sick of it. I was working, 12-hour days. I was a manager of a branch and making the same income. And I thought, you know what? There's got to be more to this. There's got to be more to what can I do? Can I get out there? And just like what you've gone through, there's risk. There's ups and downs. But I think higher risk, higher reward. And listen, did I ask my wife? I may have forgotten, but regardless, it's all good. We're still married and it worked out well, but
Right.
I did the same thing. I think people like you and I are the people with that entrepreneurial spirit. I will say my volleyball club's the same way. I honestly, I think I forgot to tell my wife I'm going to start my own volleyball club. And I think, but that's where good things come from. And, regardless of how angry the wives might get, that's where good things come from. And, you've had a lot of success, knock on wood. I've been relatively successful. So, it's a neat way for things to happen and ideas. So.
Totally. And I think you grow as a person. Like looking back, the biggest thing hasn't been, and because initially it was all about like the financial rewards. I'm gonna start my own business and, make all this money and stuff like that. But the biggest benefit, if I reflect back, has been on what it's done to me as a person, my own personal growth. And I know that could sound so cheesy, but I genuinely believe it. That's been the biggest thing of what I've learned about myself and how I handle stress and problems. And like you, when you quit, I'm sure you had moments where you're like, holy crap, what the hell? What have I done?
What have I done? Exactly. That's
and just
100%
surviving
true.
that and getting through that. And it builds a confidence in you. That, you believe you're unstoppable, not in an arrogant sort of way, that you really can be in control of your own life. So good job, Stephen Green.
Yeah,
Happy
likewise.
that you did.
Right back to you, Tom. We can end the podcast now. We're good.
Done. We patted each other on the backs. End it.
That's right. Okay, so one thing you talk a lot about, and I'm fascinated by it, and again, I find I talk about my wife a lot, but it's because she's been dragged along for this ride. But sometimes she'll hear your podcast when we get into the car, and I'm like, hey, I just want to listen to this one. There's a really good topic on that he's going through. And even she's now convinced. So talk to me about your take on hard assets. You use that term a ton. What does it mean? You talk about gold and silver and all that stuff. But what does that mean? Give me the lowdown on it.
Okay. And it's interesting that we have to talk about it like this, because I think we're in a period in the last 100 years where these last few generations don't understand what hard money is. Whereas, for 2,500 years, hard money has played a role in the economy and in society. But in the last 100 years, and specifically after, the Bretton Woods Act, or 1971, where Nixon took the US dollar off the gold standard, we really have what I would call unsound money. And I guess to understand what hard money and the importance of gold and silver, and even something possibly like Bitcoin, how these things could be of value, you have to understand what unsound money is.
So what is hard money though? What is that?
So hard money is something that cannot be manipulated by someone else's control, by a third party control. Hard money has a definite limit to it. So for example, something like gold that has been money for thousands of years, literally 2,500 years, you and I can't just go dig a hole in our backyard and find 25% of the world's gold supply and start spending it as we choose. Hard money has a definite amount to it that cannot be manipulated. So gold is an element on the periodic table. It is mined in the world, but the increase in the amount of gold relative to how much already exists is very small, meaning that the inflation rate of the gold supply is really tiny annually. So hard money is just something that cannot be manipulated either easily or at all. Whereas unsound money is something like what we've had over the last 30, 40 years, definitely, where the government can say, hey, Stephen, we control these Canadian dollars, and we've asked the Bank of Canada to just go and give us a bunch more money so that we can spend an extra 100 million or billion on some projects. That's unsound money, because the money can be controlled by a third party like a government, and they can decide what they want to do with it. And it's unsound because it doesn't have strength in and of itself. The money is being controlled by a third party, whereas hard money cannot be manipulated that way. That's why gold has played that role. It's kind of limited in its quantity. It's why some people talk about Bitcoin in the same fashion, whether you agree or disagree with it. They're saying, hey, there's only going to be 21 million of these Bitcoin. That's it. Can never be manipulated. The algorithm used to create this is what it is. It's hard money. And that's why they talk about it as hard money, cannot be manipulated.
Got it.
So unsound money is just government saying, hey, want to spend some more money. And the fault with that, to me, is that the decisions are usually never accurate. They're never usually good decisions. And the government never unwinds their spending. Yeah. So what happens over time, a population has to pay more and more taxes, and the value of Stephen Green's dollar like when you first started working 10 years ago, if you earned $10,000 in commissions and you stuffed that into your pocket and it was still there today, that $10,000 buys less in the economy today than it did 10 years ago.
Of course. Yeah.
And the reason that really upsets me is that you worked really hard for that $10,000, Stephen. Mm-hmm. So to me, that's kind of slap in your face. Like, hey, you worked really hard for that money. But you know what? 10 years has passed. You should have spent it, Stephen. Should have spent it. Because now because now it's worth less than it was 10 years ago. Yeah. To me, that feels like a robbery of my labor.
Yeah. Or if you got that $10,000 and you actually did save it, like, our parents probably told us, in a bank account at rates of 1 point nothing percent, that 10,000 is probably, even with that being saved, is worth less now, even with the interest that the bank is paying, right?
Exactly. Because with unsound money, the people who get the money first always get the benefit of it. So for example, one of the reasons we got into real estate is because in an unsound money economy, when the government puts money out into the world, it goes through the banking system. Who gets access to money really quickly? People like Stephen, yourself, and myself. When we borrow money from the banks, yep, for a property, we're the ones kind of pulling new money out of the system. It also pushes up the prices of real estate, especially in an area like the GTA where the population growth has been so strong. Mm-hmm. So the people who get access to the money first kind of get the benefit, rightly or wrongly. Whereas I kind of concluded for myself that if I'm working in a quote unquote job and paying taxes and stuff, I'm getting the money last. Right. I'm not playing the game as the way the rules have been laid out. And why did no one tell me this? I wish someone had laid out the rules so that I could have been buying properties even much earlier. Because Nick and I will always say this, Stephen, that real estate, it's not like we're in love with real estate. Real estate has freaking problems. There's always something going on, right? But the benefit of it outweighs the negatives because we live in an unsound money world where hard assets continue just to go up and up in value over time.
And of course, there is that, like we talked about, risk and reward, right? So a bit of a higher risk, and then the reward hopefully is a little bit higher as well, right?
Yeah, maybe a hugely higher risk.
Yeah.
I never want to say hugely. I always think of Donald Trump now when I say hugely.
There's
I don't want to say, but it's a lot higher risk.
Of course. And so so with hard assets, when we're talking about real estate, so what's your take then on this whole COVID thing? Like, so,
Yeah.
I mean, we're in a weird time. We're in Southwestern Ontario. Let's not kid ourselves. We're in a weird bubble right now where I hate to use that word. I know bubble's not a good word, but we are in that kind of weird thing where prices are not dropping because, I mean, there's not enough inventory. There wasn't enough inventory. So prices are not dropping yet. What's your take on that?
Yeah, I know. Isn't this the question? Yeah, this is what we're all trying to figure out. And I guess there's multiple ways that we're looking at it. Our take is that first on the economy, that we are for the first time, maybe, I don't know in how long, that our economy might be slipping into this weird deflation phase where cash, as crazy as it's going to sound, is, you know, I just kind of poo-pooed on the unsound money, that cash is going to be king in an unsound, in a deflationary environment. So I feel like that's coming our way because unemployment's going to obviously trend up, and you know, the velocity of money is decreasing, and then that leads to the real estate market 6 or 12 months from now to this uncertain place where I don't know. I don't know what's going to happen. But right now, we're seeing the same thing that you're seeing. Property prices are actually in the markets around the GTA that we're playing in. There's multiple offers. There's multiple offers.
Kitchener-Waterloo as well. Yep.
Yeah. So we're seeing it all the way Durham, Barrie, Kitchener-Waterloo, St. Catharines, Hamilton. We're seeing all of this kind of stuff. But then 6 to 12 months from now, I'm really curious because if the economy doesn't get back to any sort of full capacity, what happens to employment then? And then what happens to the banks and their ability to qualify people to buy properties? The real estate market here is a very credit-driven market. And if credit isn't accessible to the population, then naturally, I got to think real estate prices are going to be under pressure going forward. The weird thing is in this area that we get such population growth internationally through our immigration policies that Canada's like in this, especially us, you know, as you just said, in this area of Ontario. I feel that, like, do we have this weird benefit where if the population growth continues, and it definitely will be thwarted this year, but immigration, I don't feel in Canada is going to trend down. I think it's going to pick back up. So if population continues to increase, does the pressure on the real estate market get a little bit of support from the continued population growth that we have that would be very unique to this area and unlike anywhere in the US, where the demographics in the US, like per capita, we get much more immigration here, and the demographics in the US are it's an aging population like it is here, but they don't have that population growth like we have in this little area. So it's kind of this weird thing that I don't know what brings in. And I feel we have to be prepared for a deflationary environment and an inflationary environment simultaneously over the next 6, 12, 18 months, 2 years.
Awesome way to put it. And I think that's exactly it. I think if we've proven anything, I think there's always a lot of immigration in North America in general because of our lifestyles, of freedoms, and you know, just look at the basic privilege of living in Canada.
Totally, it's great.
Having said that, I think people who are now looking at North America in general, just Canada and the US, we see what's going on in the US. It ain't pretty down there. Like, it's just not pretty right now. So where are people going to want to come? If they have a choice between Canada and the US, they're going to want to come to Canada. So to your point, they automatically go to the major cities. No one's going to Regina, right? So, you know, that could prop up, to your point, that could be that other side where, yes, unemployment's going up for the people who live here and that sort of thing. And businesses is they're coming down, but that might prop us up a little bit. You know, that might actually help. And there's nothing wrong with that from the standpoint that, you know, all of our hard assets will continue to grow that way, right? The other thing I'm quite worried about, and it's one of the things that I always pay attention to, is you were saying we're a very credit-driven economy, and there is so much unsecured debt. And I always tell the number I always look at is the debt to income ratio, right? I mean, that's something I talk about almost every week. How much debt do we have? So, I mean, if you recall, 10, 15 years ago when we were at maybe 145 of debt to income ratio, they were saying, man, if we hit 160, it's over. It's over. Now, we didn't calculate in inflation and stuff like that, but we're at $1.76 now. So we're so worried about kind of mortgage rules and stuff like that when we're securing against an asset. You know, we were talking about this before we came on. My 19-year-old son, who has a part-time job at Boston Pizza, he got a credit card in the mail, pre-approved, ready to go, $3,000. And he comes to me, and here's the illustration of how it's so crazy. He comes to me and he says, what do I do with this? I'm like, dude, if you don't know what to do with a credit card you've been pre-approved for, you should not have that thing, right? So that's what I'm worried. I'm more worried about credit because everyone's got debt. Everyone's got credit. They owe a lot of money and it's unsecured at 20%. That's what I'm personally worried about. Right?
I'm with you. And if you can't support the payments on that debt, what does the world look like going forward? And if that's the case, when the government and the central banks, so the Bank of Canada and the Federal Reserve here in North America, they're going to want people to spend. But if we are so indebted as a population, I don't care what interest rate you give me. Yep. There's going to be a point where it's like, I just cannot handle it. So it doesn't matter. You can drop interest rates. And I have a weird feeling, Stephen, that we're going to see negative. And I know the Bank of Canada does not want to do that, but I'm so fascinated by this that it doesn't matter how low interest rates go. There's a certain point where the population you cannot take anymore. And if employment gets a little weaker, how does that situation not create this loop where things just kind of go into this weird negative spiral for a little while? And I am a very positive person, but I don't like some of the things I see in the future. So Stephen, cheer us up, man. Cheer us up. Bring us out of this, dude. Bring us out of this. Bring us out of this.
Mortgage rates are still really low right now. Just want to throw that out there. So public service announcement. If you're looking to buy a house, let me know because the rates are really good, really good. And you know, it's funny because I think, so on the positive side, let's throw this one out. On the positive side, most of the banks, and you know, we know which one I work for. I think a lot of it has been wait and see. And we haven't come out with like hardcore policy changes. We might see the first ones from CMHC. I know they're not a bank, but rumor is they're looking at 10% down, minimum down payment, because they're worried that all these houses are going to drop in prices. But most of the banks, I'll be honest, we're in a wait and see right now. You know, I don't think you don't know. I'm telling you right now, the bank knows less, right? And it's more just trying to figure out, what is this going to look like? Every application we send in is common sense. What does it look like? Can they afford it? Can they not? Right? And we've got this weird world of low rates. So everyone wants to buy a house who's still working. Everybody wants to buy a house, right? So and rates are, I mean, I'm just flashing back to our family. Our family had a mortgage in Mississauga. Our parents still live in that same house in Mississauga, but the mortgage rate at one point in Mississauga in the 1980s was 16.5%. 16.5%. The weirdest thing, the weirdest example is that at 16.5% sounds super high, but if inflation, which was out of control in the 80s, and I'm going to exaggerate a little bit here, but if 16.5% was your interest rate and inflation was 18%, 16.5 minus the 18, which gives you the real rate, is negative 1.5, which is technically lower. Real rates would technically be lower than they are today. That's why, and the fact that we have to think about things in this weird way is the fault to me of unsound money. Because you and I have to play armchair economists, where I don't believe there should be a need for that. It should be pretty simple. Stephen offers value to the economy. In exchange for the value, he gets paid. That's it. He can choose to save or spend or whatever. But I prefer an environment, and maybe that's just some Pollyanna type thinking, like that just can't be possible perhaps. But I just love that type of economy. Whereas we have to, in today's world, understand some economic indicators that I don't believe really it's in, no one kind of left school thinking, well, for me to really get ahead, I'm going to go into a career of into the tech industry, but to get ahead, I'm really going to have to understand the economic indicators that affect me and my family. I didn't think I would have to go there, but you have to, and in a world that is so kind of weird and backwards.
right?
And
So
yeah, and I think listen, people look to me for advice all the time. What should I do? Fixed, variable? Should I go 5-year, 3-year? I
yeah, what
tell
do you tell them?
people.
I'm curious. I'm curious what you tell them.
So I told one client this. I said, remember my crystal ball I used to have? It's up against the wall in pieces. I'm done. Like, so I tell people, look at what's presented. Look at your situation now, because you're gonna have to make a decision in the present. Because, and when you make your choice, don't look back, because if you look back, you will drive yourself insane. Just here's what's available. Here's your situation now. We don't know what's going to happen.
And were you in a
But
situation? Oh, go ahead. Go ahead. Sorry.
no, I was going to say, but the rates are low, so you're going to win somehow. We just don't know how well you're going to win, right?
Were you in a situation? I guess maybe was it a year ago or so where fixed was underneath what you were offering in a variable rate?
Yeah.
Yeah. Isn't that crazy? That was.
And I tell people, I'm like, my advice now has changed. So back when we kind of knew what might have been happening in the world before this COVID thing came, it was, I don't think I did Tom, I don't think I did a variable rate mortgage. I think I might have done one in 8 months, because why would you bother? And that's how investors looked at it. I'll take a 2-year or a 3-year, but take advantage now. I don't have to worry about the rates. Right now, all those people, I hope they're not listening to this, but with the prime rate dropping the way it did, we didn't know, right? So look at the present, make your choice on it, on what you're looking at right now, right? So that's the best you can do. There's nothing else you can do, because how many economists are wrong right now?
Yeah,
Over
all
and
of them.
over and over. So here's the present. Live in the present, folks. That's what you got to do here, right? So what do you think negative interest rates look like? If they drop below, what does that look like in our world?
I think that looks like winning if you're a real estate investor, because we have this little informal contest here at Rockstar that the first person to get a negative interest rate mortgage, because there's going to be a distinction between negative rates and if they actually work their way into the mortgage market. But if they work their way right through to the mortgage market and you're getting paid to borrow on an income property, then I'm like, you know what? You've won life. That's it. You've won life. You borrow money. You're getting paid to borrow the money. You got an income property. But that world, I mean, to me, that would be the signal in a more serious sense. To me, that's a signal that the central banks have lost control of the economy and are desperately trying to get inflation. And the reason they need to get inflation is because in a debt-based money system with unsound money, if you grow the economy by growing the debt, that's the fundamentals of how that works. If the revenues of the economy, so if the size of the economy shrink, the debt looks bigger and bigger against a smaller revenue base. They need the inflation to kind of balance that out, to make the debt look as a percentage. Just, you were talking percentages of debt on an individual basis. Yep. At the government level, they need that to kind of balance itself out. They need inflation. It's a requirement in an unsound money system. And to me, if rates go negative, that's just a sign. And that would be the bond market likely going negative. And the bond market, to me, is one of the only markets that is giving us any indication of what's actually happening in the world, because the stock markets, to me, just you can't really gather data from them anymore. But the bond market, to me, if it goes negative, that would be the bond market signaling deflation. And if rates go negative here in Canada, the bond market goes here in Canada, to me, that's a moment where Steve and I might be calling you saying, okay, you know what, it's game on. Deflation is taking hold. The bond market's telling us deflation is taking hold, and prepare yourself.
Yeah.
and all I mean by that is have some liquid cash, because cash is going to be king in a deflationary environment. So that's where someone working with you, Stephen, I would my personal advice would be get that credit line on the property that you might not have, get some liquid cash reserves going, because in a deflationary environment, that's really what you want. In my opinion.
I agree with you. So for years, years going back probably 5 or 6 years now, I've been telling all investors, because I deal primarily with investors, and I've been telling them, So this is 5-6 years ago. I said, guys, gone are the days of having $2-3 million in mortgages and $20 in the bank. Those days are just gone. And that was 5 years ago. And here we are now. And sure enough, the bank, there was not a hard number policy, but they're saying, how is this client going to back up his debt? What happens when he has 4 rental properties and all of them are out of work and now he's got to support his income or support the mortgage payment on the rental? So they're now asking that question outright. What's the plan? Where's the money going to come from? Right. So you're absolutely correct. I think there has to be a balance. Spend lots of money on down payments for new properties. I say more properties, the better, but be balanced. Have some money there. So, tenants are going to break windows. They're going to have crazy parties. A roof will need to be done. You got to have that money there anyway for that, right? So
yeah, we're similar to you in that regard, because we've always told people over the years, I think in investor communities, it's been popular to say, like, how many properties do you own, or like how many doors do you own, and that kind of stuff. And it's Nick and I have never believed that, because we've met people here over the years, like some older gentlemen that have walked in and they've had like 4 properties, 5 properties, or 6 properties, let's say. So in the investor world, that might not be like shocking anyone or something, but they were completely paid off. Yes. They were completely paid off. And this guy's telling us the cash flow that he's generating from 6. There was one gentleman when we were starting out, I think this would have been around the year 2010, walks in before we even had our own office. And he was just checking us out. I think he was in his early 70s, came up in a rusted minivan. Nick and I were like, who's this guy walking in here? Not really our demographic age-wise. Rusted minivan, sits down, goes on to tell us that he had 12 properties, fully detached homes in Richmond Hill, fully paid off. Fully paid off. He was telling us about the cash flow. He said how did his story go? He said when he first got them, like in the 80s or whatever, that I think in 1989 and the recession in 1990, everyone told him sell, it's going to get worse, sell. He didn't sell. Instead, he was telling us stories how him and his wife, when tenants would move out, would go and paint the walls and do the carpet cleaning themselves and that kind of stuff. Then in the 90s, when the tech crash happened, he was told, sell your properties. The economy is going to get worse, sell. And so he said he had all these times where he was told to sell, but he just held the properties, which is part of the reason I like real estate, because you can't get emotional. No, you can't just be like, hit the button, like sell, because Nick and I have been in that environment before. We've had properties where something bad happens with a tenant. We're like, oh, just sell it, Nick, just get rid of it. But we haven't, thankfully, but you're tempted, right? But so he goes on to say they're all paid off. He was telling us his monthly cash flow, which was huge, right? Huge amount of monthly cash flow. And I was just sitting here, you know what? It's not about the amount of properties you own. So going back to your point, it's like, how set up are you? Can you carry the debt? We tell everyone one single property can change your financial future. Yep. Look, I bought a property, I don't know how many years ago now. This one that I'm thinking of was I think it's like 19 years ago. I own it 50% with my brother. I thought at the time that my son's now 18. I thought at the time, and he's going into university as we were discussing. I thought at the time, half of ownership of that property might pay for his education. That was my goal. Half ownership of that property is not only going to pay for his entire education, it's going to pay for my daughter's full education.
Perfect. And
there's going to be money left over. I'm talking about 50% ownership of one property. And awesome. And again, there's ups and downs, and you have to be prepared. The real estate market is not like the most balanced thing in the world. Mm-hmm. I'm just saying that, when you own real estate, it just takes one property to change your life. Unfortunately, you have to survive wild swings in the market to get to that point, which is why I think the advice of someone like yourself, when you can talk to someone like yourself, Stephen, and say, hey, what are you thinking about rates? And you can banter back and forth and get ideas. We can all help each other in that capacity, which is why I'm very grateful to have crossed paths with you. Because I really think together as a community, we can all kind of share ideas and you can make your own conclusion for yourself, but we can have this conversation. But really just one property is enough to really change your life.
Yeah, thanks, Tom. I appreciate that. And there you go. There is part 1 of 2 with Tom Karadza. Great guest. Love talking to the guy. Make sure you listen in for our next episode. We're going to be talking about how to deal with our biggest trade partner in the U.S., Olive Garden, and how we miss it. So what's changed for Tom and his Rockstar coaches in the office and working with clients? And finally, we talk about building relationships during a pandemic. Again, another fun-filled episode. Probably the most important part, though, we are going to talk about Tom's grade 8 volleyball game and his underhand serve. Talk to you all soon.
Thank you for listening to the Green Effect Podcast. Subscribe to this podcast on iTunes or Google Play so you catch the next episode. And don't forget to leave a review. Much appreciated.